Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. Global markets have been buoyant this year, shrugging off trade wars and geopolitical worries and embracing the potential of AI. The average investment trust has performed well, delivering 9% share price total return over 12 months and 43% and 179% respectively over 5 and 10 years to the 1st of December 2025. But the average discount is still wide, sitting at 13%, and that excludes venture capital trusts and 3i. So as 2026 fast approaches, can this market momentum continue? Well, today I'm delighted to be joined by three managers to discuss the year that was 2025 and the opportunities and challenges going into 2026. A very warm welcome to Lawrence Burns, Manager of Scottish Mortgage Investment Trust, Jeb Curtis, Manager of City of London Investment Trust, and Dale Nicholls, Manager of Fidelity China Special Situations. Right, on to the questions. How has your investment trust navigated this year's markets, and what are you most proud of? I'm going to start off with Lawrence.
So my answer to this is quite simple and in some ways perhaps even a little bit boring. We've navigated this year's markets by doing what we always do, backing exceptional growth companies and trying to be patient and long-term owners of them. We've seen a number of holdings deliver really strong operational progress this year, which has been encouraging, but a single year is far too short a period for us to take a victory lap on any individual investment decision. And so really what I'm most proud of is just in the midst of volatility, in the midst of various events that have gone on this year, we've continued to stick to our philosophy, stick to our core competence, and stick to what we believe will add value for long-term shareholders.
Good stuff, Lawrence. You've stuck to your knitting. Joe, how has your trust navigated this year's markets, and what are you most proud of?
Well, it's been a good year for the UK market, and time we're talking, it's up over 20% year to date, and City London's outperformed that. And of course, we've increased our dividend for the 59th consecutive year. I'm particularly pleased with the overweight position we took in the banking sector 2 years ago, having been underweight since before the financial crisis. And that's really worked very well in terms of both capital appreciation, share prices going up, and also very good dividend growth we received from the banks. So I'm very pleased with that particular decision.
Well done on that bank's decision, Joe. And Dale, how have you navigated this year, and what are you most proud of?
Yeah, I'm most proud of us sticking to our basic process, trying to find the best companies and having the conviction to back them. So we've had pretty high gearing, reflecting the opportunities that we're seeing, despite China being, I guess, very out of favor. I think things are starting to shift. The fact that the earnings have come through a lot of companies, I think reflects the process, and that's led us to be up over 50% year to date. So I think things are starting to shift, and again, it's good to see that coming through. I guess I'd also be proud of when I look at the attribution. Over 50% of the names of the top 10 contributors are non-benchmark. So again, I think it reflects our team really looking broad for the best ideas and getting them into the portfolio.
Yeah, great year for performance and some great research from the team too. Right, Joe, let's kick off with you now. What are the biggest risks you see ahead in 2026?
Well, I think for me, the geopolitical risks are still out there, and hopefully nothing will come to pass next year. But obviously, there's still tensions between the West and Russia, and also between the West and China, and the situation in the Middle East continues. So I think for me, that's an underlying sort of concern, but hopefully we'll come through another year without any major issues.
Let's hope so. Dale, what are your concerns about the risk ahead in 2026?
Yeah, I'd probably focus more on the domestic economy. Actually, in China, we've struggled, for a couple of years, particularly in the property sector. I think has held things back. I do think we're at a phase where, the supply side is adjusted enough that pricing can stabilize, but I really want to see that play out. So, the risk that that doesn't happen, I guess, would be the biggest factor. I think it's low risk, but it's it's something that we need to continue to watch.
Need to keep an eye on it.
Yeah.
Right. And Lawrence, how about you? What are your concerns about the risks in 2026?
I think I'd probably highlight two risks effectively, and they're risks that will be true for any given year. I mean, I think the first is to just be careful of thinking too much in 1 year chunks. The stock market is an extraordinary long-term wealth creation machine, but over any given 12-month period, frankly, anything almost can happen. And so we try not to let that sort of single year focus dominate our decisions, because then you're more likely to trade around noise than compound real value. And we find patience beats trying to time the market. The second would just be, again, I think there's a perennial risk of just being underweight change. And that matters for us, even though we're investing in change, of making sure we don't miss the next big thing that might come along and dominate market returns. And so it's about trying to be open-minded to where change might come from and what it might look like. And so it's about focusing on the long term and not missing what are the big areas of change in the economy in any given year or period.
Very sensible, Lawrence. Embracing innovation, I can appreciate that. Right, my next question. If the tech bubble were to burst, how would it affect your investment trust? And I'm going to ask that to Dale.
Yeah, I mean, I think, there would definitely be some impact. We have, holdings in some of the big tech companies in China. But, I think they would hold up relatively well relative to global markets, just given that they trade at really significant discounts to their global peers. But at the same time, we have big holdings in very out of favor parts of the market as well that have nothing to do with the tech cycle. And I'd highlight sort of, the consumer space as examples, areas like property. In general, I think, we'd hold up pretty well. We're sort of, our starting point in sort of valuations for the trust are pretty attractive at sort of low teens. So I think we'd hold up relatively well versus global markets in that situation.
Yeah, well, that diversification would definitely benefit you. Lawrence, if there was going to be a tech or an AI bubble bursting, how would it affect your trust?
I think when you see a lot of new technologies, it's never a straight line or a smooth path. And if you did see some form of tech sell-off, it would be very natural to assume that would be a headwind for us, our style of investing in a number of the companies in the portfolio. But I think one thing I'd really highlight is that Scottish Mortgage is far broader than just an AI theme. We're invested in the energy transition, in digital financial services, in new ways of delivering through drones, a huge array of different types of companies that are based all around the world. So it's not a single AI bet portfolio. It's not a single country portfolio. And indeed, if you look versus the Mag 7, the big US tech companies, we're actually underweight them. So it's a global diversified bet on change is really what we're trying to do with our portfolio.
Yeah, real diversification and innovation in companies that are going to shape the future, I would say. Now, Job, I'm fascinated by what you're going to say to this question, because obviously you haven't got very much exposure to technology. But do tell me, if it would burst, how would it impact your investment trust?
Well, I think it would affect all world equity markets, to be honest, because the big tech companies in America are just so big in terms of their market capitalization that it'd be naive to not think it wouldn't affect all markets. I mean, Nvidia, for example, is bigger than, in market cap terms, bigger than the whole of the UK stock market put together. All the companies in the FTSE 100. Having said that, we are pretty lightly exposed to technology companies as such, and so, I mean, our main weights in the City of London are consumer staples, everyday consumer companies, financials, that's banks and insurers, financial services, and real estate investment trusts. And so we would see ourselves, being relatively less affected by if the bubble does burst.
Yes, and obviously you have that amazing dividend record, 59 years of consecutive dividend rises, which, a lot of your investors are invested in you for. So what opportunities do you see ahead in 2026 and beyond? I'm going to ask that to Lawrence, please.
I think the good thing about this moment in time is that we see deep broadening and accelerating change across a range of industries, across a range of countries. Again, it won't be in a straight line, but I think the long-term trend lines are really clear. And it's the breadth of opportunities that really interests us. AI is a big part of that, but it's not the only part. It's everything from our largest holding, SpaceX, lowering the cost to access space, to companies like Nubank revolutionizing access to financial services, to Mercado Libre in C in Latin America and Southeast Asia, providing access to retail goods online, to Zipline that are now doing drone deliveries for Walmart in Arkansas, or Aurora doing driverless trucks delivering freight across Texas. It's the diversity of change that I think is really, really interesting as we head into 2026 and for the rest of this decade.
Yeah, well, here I am in deepest, darkest Oxfordshire, and I'm relying on SpaceX and Starlink to provide my internet. So it really is impacting and improving people's everyday lives, quite honestly. Jabe, can I ask you, what opportunities do you see ahead in 2026 and beyond?
Well, I think despite the good performance we have from the UK stock market in 2025, we start with a very good valuation at the beginning of 2026. In particular, the dividend yield of the UK equity market is around 3.3%. And then on top of that, share buybacks by companies are worth some 2.2% of the total market capitalization. So you've got what we call a total distribution yield of 5.5%, which is a highly attractive starting point. And on a whole range of valuation measures, UK companies are attractively rated compared to overseas equivalents. So I think that's a decent starting point for investors.
I would agree. I think that sounds like a very attractive income, quite honestly. And Dale, you've had the most roaring year in China this year. And what do you see are the opportunities in 2026 and beyond for you?
Yeah, I think perceptions towards China are starting to change. We've clearly moved out of that uninvestable phase, but there's still a long way that perceptions can change. And I still think there's an underappreciation of the competitiveness of a lot of companies. They've invested significantly in R&D over the years, and you're seeing that, and that's coming through in market share gains across a range of sectors. So, I'd point to our big bets in the industrial space. There's a range of companies, the companies that support the whole EV system, companies that are enabling autonomous driving, I think is a particularly interesting area. So areas like LiDAR, and again, sort of leveraging, strong global market share in new sort of evolving sectors. The other area that I'd point to is the consumer. It's been very out of favor. The consumer is clearly underspent, post-COVID. But, given a lot of the trends that we've talked about in China, the hope is that, things can stabilize and slowly start to improve, and we can start to appreciate that sort of long-term story around, the sort of evolution of the middle class in China leading to, improved consumption. I think that's something to look forward to. It's very, I guess, non-consensus, and because of that, the stocks are, really attractively priced. But that would be, I think, something to look forward to in 2026.
Well, let's hope that happens. I'd very much like to thank our managers for joining us today. It's been great to hear their views. I'd like to emphasize that we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you are in any doubt, you should talk to a financial advisor. I'd like to thank you so much for watching today.